Hi everybody, Brian here from quantlabs.net. Good news and bad news. The good news is that we have a winning model, but it's still unprofitable, and I'm going to try to explain it to you as best as I can. So if you're interested in these topics, uh, really all I could tell you is go over to the quantlabs.net/book uh, site here page and fill out all your details and get in on it because you won't learn stuff like this anywhere else. So last night I've been posting a very good algorithm. It's been win ratio of 87%. I'm not sure if a lot of people go through this, but I think this analysis is kind of critical on your overall P&L. So you'll go win-loss ratio about 30 positions in about 12 hours. But yeah, we still have a negative profit. And you go, how's that possible? In here, I spent almost 2 hour video putting this together, starting from no code. I've got the code going through the entire process. And this is all in Python. The entire process of the thinking process when you look at your trading results and how to parse up a file and then be able to process every single position, buy and sell in crypto, and calculate the position and figure out if you have a winner or loser. In this case, we have losing, but again, yet we have a win-loss ratio of 87%, which is really strong. But yet we're still losing money, and I go through the whole thing on why that's the case. So, in a nutshell, when you take on certain things, let's say you're trading small coins, along comes a Bitcoin trade, and you just decide, well, Bitcoin's a big coin, and then you could lose on that Bitcoin trade. That could wipe out your whole trading day. Even though all the smaller coins are trading well, but using the same algo, this is the exact same scenario we have. We got lucky here, where the total rate of return ended up being this. But you know, there's a lot of factors here you have to factor in. Is I'll show you here the position here. See, we have up to this point. This is about 10 positions in. We have a positive total ROI for the when this bot started. We have a positive running total in crypto, and this is all in Ethereum because that's all we're trading is in Ethereum. And then along comes this one bad trade link. It's a big loss, almost quite a bit of a loss. Wipes out our total and our total return rate of return. And then we have to do more trades to recoup that loss. Now, there's a number of factors here, as I suggested. Do we stop once we hit a certain amount of our total ROI and take profit while we can and just stop trading for the day and start up again the next day? This is what we call capital preservation and protecting your profit. Because all it takes is something like this to come along and wipe out the trade. So there's a lot of, as I said, there's a lot of factors here. So you ask yourself, do you stop trading, wait it out, and start again? And once you hit that rate of return on investment for in total capital on all these positions, and stop and go, yay, I made money? Or do you continue? So let's say if we said 4% for the day, and then we stop. Once we stop here, we retain our profit. Here's the problem that we're having right now as this is working on real live data. We have 32 positions that were taken, 32 complete orders with an exit. Four of them are still open, and we have no idea what the market looks like or how those positions or orders will end up if profitable or not. But when you factor in our total return is pretty good, we still overall have negative, no profit. So there's all these factors at play because of the size that we, or the type of coin we trade, maybe bigger than another type of coin. So the question is, when do we stop? So this is where machine learning will help you, but we need enough type of data that this needs to be run over, probably a couple of months. And then, as I said, when we hit this negative trade here, is it just better to say, hey, if we got a return on investment of 3%, 4%, just stop. We've made money, and walk away and start and wait it out to the next day. That's probably the secret. A lot of people will argue. The retail traders will argue. I've dealt with 9-digit folks that trade. I'll repeat, 9-digit. So we're talking 100 million plus. This is what they tell me, and what they do is once they hit this level, they stop. They walk away and go, I've made 4% today. I'm not going to risk it. I'm still profitable, and walk away. And they could do this 7 days a week with crypto. So let me see the time. I don't know when this, I could probably load up. This is probably a few hours into when I started this bot, when I first started it. So this didn't take long to get to this point, and you just stop. And you don't care about the rest of the day where it's at, because you're now dealing with probabilities on losses and quote unquote over trading, where you hit this goal at some point and along comes some trade and it wipes out all that return and wipes out the total profit that you made for the day. So that's why I'm saying that is very critical. So I created a 2-hour video on this for my elite members. And these are factors that people never think about at all, because I cannot argue with an algo or a model that's pulling in a win-loss ratio of 87%, but still losing money. And the reason is because of this type of analysis. So I put up this video, this whole thinking process over the last 2 hours, plus the source code to get me to this point. I think this is one of many, many important skills, because you may just to get to a point where you could say you have a model that wins 87% is probably 1/4 of the battle. And that's hard enough to get to. And then the next point is money management and retaining your profit for the day. Even though you're getting 87% profit, that's pretty good. Or 80% wins on all the total number of trades that you're making. So factoring this in, I made a whole video on it. I'm looking for people's comments on this, how you approach it, where do you stop, or do you do this at all, or just let it run through the day for a 24-hour process, and you pray to the money gods that this will work out. So let me know what you think. It's a very important factor, but I will say from the small amount of people that I have been very fortunate to be presented with over the years, they tell me once you hit a certain rate of return or a certain return on investment, just stop, wait it out, be happy, protect your profit for the day, move on to the next day, and just leave it at that. Because once you are doing that and you know you're getting those kind of returns for the day, you can then scale up your orders, because these are minimal, but you could scale them up by 100 or 1,000 or 100,000 in crypto. So these are things that you need to understand and know what the actual position sizing you should have using other techniques like Kelly criterion, so that if you have a good running record, you can throw money at it. And if it gets to a point now where you start taking losses, you throttle down the amount of capital you throw at each trade, so you'll be able to retain that profit. But I think it's more important just to stop at a certain point once you reach a certain daily target on your total return on investment for the day. That's what I'm thinking. I'm just looking for some feedback here. But let me know, and we shall talk to you later. Thanks for watching as usual, and have yourselves a good day.